Wow, sellers are in trouble and delinquencies on mortgages are rising. If you take a look at this, 79% of current sellers wish that they had listed their home sooner. And if we hop over here, mortgage delinquencies are exploding. Now we're going to cover this and I'm going to show you what I'm seeing in my local housing market and how you as a buyer can follow the market that you're in. If it's Detroit, if it's New York, if it's Los Angeles, if it's Houston, if it's Austin, Texas, if it's Chicago, wherever it's at. And that way you're able to locate a good real estate agent. But right here, mortgage delinquencies are exploding and we're seeing that 79% of current sellers wish that they had listed their house sooner. And what's happening is sellers are taking their house off the market at rapid pace. Now, why is that important? Well, let's take a look at my housing market. And this is why it's important that you get yourself a good real estate agent that's going to be able to share with you the actual market conditions in your local housing market. And this is how you follow stuff. If you take a look at this, this is this blue purple line. This is the inventory in my local housing market here in the greater Salt Lake area. So I'm Dinko the Realtor. And I'm going to be sharing with you here how you can take advantage of the housing market. So right here, this blue purple line, it's showing you that there's much more inventory than in the years past. So you want your real estate agent, you want to find one that's actually following the market trends and that's going to actually share with you what's actually going on and not just try to fearmonger you. If you hear something, it's always a great time to buy a home. The best time to buy a home was X time and the best time is now. Don't fall for that stuff. Have them actually show you substance of why they believe that. Now, there's certain markets in the United States, Northeast, where they are seeing much more healthier economy, well, not economy, but a housing market. And the housing market there is slightly increasing because the inventory, the builders didn't go crazy like they did on the south side and the west side of the United States. So right here, you want to follow all of this. But this right here is the big thing to pay attention to, is mortgage delinquencies are absolutely increasing. And if sellers are regretting and they've taken their houses off the market at record pace here in the last decade, well, that just means when January, February, March, April roll around of 2026, there's going to be a dump of homes coming to the market. And if you take a look at my housing market, that's exactly what happened. If you take a look at this blue purple line, you see that all these years past, inventory is usually going down until the spring. And seasonality, right? People are selling and buying houses the most in the spring and in the summer. As school year starts, that starts dwindling down because we head toward the holidays, winter months, especially where I'm located in the greater Salt Lake area. So right here, you see that. But however, last year, starting January, the inventory just started exploding upwards. Now, if we see that sellers hope and were wishing that they listed sooner and that they're taking their houses off the market, well, we can anticipate that what we're going to see is this inventory at the beginning of the year in these markets like mine increasing. And especially if mortgage delinquencies, like they are right here, increasing, that's going to impact the entire United States of America. So right here, this is a big thing to pay attention to. Vantage Score and Investopedia both say that the lenders are currently witnessing is true. So what the lenders are witnessing is true. The early delinquencies are rising faster than any other type of consumer credit. So again, these delinquencies are rising faster than any other type of consumer debt. Now, we're going to have to pay attention to see what happens here, but they are removing the FHA mitigation foreclosure prevention program. COVID, wild. We're still having COVID mitigation foreclosure programs. Now that is going to fall off here September 30th. So people are going to have a much harder time forbearance, not paying their mortgages, and having foreclosure prevention. So we're seeing that this is impacting, and I'll get to this a little bit later, some more detail. The stress is real, it's coming early, and it's going faster than when most investors think. Now, of course, investors, banks, government officials, they always want to just show us that everything's going to be good. If they were to come out and say, hey, there's going to be a recession, there's going to be foreclosures, well, if it comes from the government, then everybody would say, oh my gosh, this is true, and we would probably have a extremely severe recession because then everybody would be paying attention to what the government is saying. So they always want to give more better news because they don't want everybody to freak out like in the Great Depression. Now, right here, this reality refrains from the macro picture. Now, What macro is, for example, United States of America is a macro picture. However, micro is going to be your metro area. For me, it's the Greater Salt Lake area. And also Utah could be the macro and Salt Lake could be the micro. So macroeconomics is the bigger picture, microeconomics is the smaller picture. Also, we have the world economy, which would be macro, and then the US economy would be a micro. So it's just that's how you analyze that part. So this reality refrains from the macro picture. It confirms what many investors have felt beneath the surface. This isn't just about high interest rates or inflation fatigue, it's about behavioral collapse. Now, this right here, the consumer is no longer just stretched, they're snapping. Now, I'm going to show you something else here that I've been covering in some previous videos to really pay attention to. For all of the soft landing talk, let me just remove myself here. For all of that soft landing talk, this is the hard truth. We're witnessing early stages of a credit deterioration cycle that markets are failing to price in. It's showing up first in the subprime auto, now in mortgages, and next it may bleed into the broader consumer credit and regional banks. Now right here, this credit deterioration cycle, that is something that I have been talking about a lot. Now, right here, you're seeing that bankruptcies are increasing 11.5% year over year. And this was as of July 30th of 2025. And if we come over here, we're seeing that the car industry, the late car payments hit the highest level in decades. Now, Fitch started keeping track of this in 1992. So right here, late car payments hit the highest level in decades. And if we end up over here, we see that the credit student loan delinquencies are reporting. Now, this is what is impacting a ton of people. And this is what is also slowing down the economy, because once somebody has a delinquency on from their student loan on their credit score, they no longer can qualify for a mortgage. And they almost no longer can qualify for a car loan either. That's a little bit easier, not as much underwriting as there is for mortgages at all, but right here, when the federal forbearance officially ended October of 2024 and delinquency reporting resumed, the scoreboard caught up with reality. Approximately 2 million, let me just remove myself so I'm not blocking anything. Approximately 2 million auto loan borrowers had student loan delinquencies added to their credit file in Q1 of 2025. So this is just quarter one, January, February, March, right? Now, that's going to be millions and millions of people more being impacted. So you're seeing that these big severe credit score hits were happening to some of these car loan holders. Now, that is having a havoc nightmare on the consumer, because you're seeing it. And that's what they're talking about, is this credit deterioration cycle is real, because the consumer is stretched with inflation. The dollar doesn't go as far as it used to. And now you're actually having credit scores being severely impacted. First, of course, it states right here, first the subprime auto loan and now mortgages. So you're seeing it impacting stuff. Now, in my housing market, this right here is showing you what's happening. Our under contracts are negative. So right there to the right, you're seeing negative 3% year over year. Well, if we have a higher inventory and more houses are coming to the market, now if we start having less houses going pending under contract, that means the sold data is also going to start going negative year over year, which means that inventory buildup here is probably going to keep increasing, especially when the 2026 year comes around. We might see a dump of sellers putting their house on the market because they're waiting for a better time. And 79% of sellers wish they had listed sooner. So keep that in mind. That could be a pretty big influx of homes. So again, if we come back over here, we take a look at my local housing market, this blue purple line at the top, you're seeing much more inventory, and then it stagnated here in the summer. But you're seeing that it started at the beginning of the year increasing much more because of the amount of sellers that were dumping their house, that were waiting for a better time. Well, if that's the case now, we could see that dump of homes again in 2026. And this is a trend nationwide. Now, there are some markets around the country that are doing better than the rest, but a lot of them out there are really struggling, especially the places that really blew up during the COVID pandemic lockdowns. Now, we're going to do a recap here. And if you haven't, Dinko the Realtor has your back. So hit the like button. hit the subscribe button. The like button will push the video in front of more people. The subscribe button will keep you up to date when the new videos drop, so you're up to date with all of these things that are impacting the housing market. So right here, 79% of sellers wish they had listed sooner. We're seeing the mortgage delinquencies are exploding. Now, I wouldn't say exploding just quite yet because of all the prevention programs that have been in place, but we definitely are. In my local housing market, I am seeing more and more short sales on the housing market, And right here, we're seeing that credit deterioration cycle is really starting on cars, car loans, and mortgages. Bankruptcies are up 11.5%, and the car payments are late car payments at the highest level in decades. And we're seeing that over 2 million people just at the beginning of the year have been impacted by student loans resuming. So if it's 2 million, it could be 10 million plus after the year is over or going into next year. We're seeing that in my local housing market, the inventory is starting to trend negative under contracts with these pending homes. So that means inventory is going to continue increasing. So you're seeing this gap of this year compared to last year. And if inventory keeps increasing nationwide at this pace, we are going to start seeing a better and better buyer's market. Now, if you tend to buy depending on how the inventory is looking in your market, when the contracts are going down, inventory is going up, less buyers, more sellers, you have more leverage. And this is why it's important that you get a real estate agent that knows what they're doing, that they're actually going to share this with you. And now this right here, forgot to actually share this, but right here, mortgages, you're seeing that they were dropping and it was almost a cliff drop here, a cliff drop here, and then a cliff increase right here. Somebody started climbing the cliff. So you're seeing that these mortgage rates are now coming back towards 6.5%. So they were at 6.5, falling down towards 6, and all of a sudden they're U-turned because, well, it happened last year as well. The Fed cut rates and the interest rates did not come down. So to stay up to date with what's going on in the housing market, hit the like button, hit the subscribe button, and have a great day or night whenever you're watching this.